Andrew, is what the Fed has done, guys. Last week we were talking about the local elections. This week, I think we have to. That's a dominating driver, right?
Yeah,
What the Fed has done. So let me actually head over to the big wall and tell you. The focus of the piece really is how do markets trade around rate cuts, right? That's essentially what we are looking at here. So 500 basis points of rate cuts over the last 20 months. And now we finally have, after many ifs and buts and whether it'll happen, not happen, soft landing, hard landing, pivot coming, we finally, I think, have a pivot, which is basically a complete U-turn in terms of what the Fed is now saying they would like to do next. So this is essentially, the setup. First 25 basis point cut is now being priced in by the market in May of 2024. The market is saying that the inflation trajectory will be very benign, which basically will allow the Fed to cut early so as to sort of, prevent over-tightening and the resultant effects of over-tightening, which could be a recession. So that's essentially what the market is betting on. Almost like immaculate disinflation, right? Not too hot, not too cold. Will it pan out? We don't know. Now, rate cutting cycles are basically of two kinds. One is because there is a recession. I mean, the economy goes through a recession, so the central bank is expected to step in. These are those recession rate cutting cycles: 70, 74, 80, 81, 89, 2001, and 2007. Of course, this is the global financial crisis we are most familiar with. And of course, there are also some sort of rate cutting cycles where there is no recession. 84, 87, that stock market crash in October of 87, 95, 98, and 2019 as well. But both these are very different in terms of how the markets kind of behave. So what I've done is for our purposes, since the market is saying that it's going to be a soft landing, no recession or anything of that sort, let's just take the no recession rate cutting cycles. I've not used all the examples. I've only gone back all the way till 1987. And this is the quantum of rate cuts that we saw. The first cut happened, these are the dates, August 1st, September 29th, etc. And this is the total quantum of the rate cut that we saw in that particular cycle. Now we come to the more interesting part, which is what happens to the market going into rate cuts and what happens to markets coming out of rate cuts, right? This is, remember, the no recession scenario. And this is the picture which emerges. Broadly, the picture is that 3 months before the first rate cut, markets kind of slow down, quieten down a little bit. Actually, there are, three instances. One instance where there's a 20% plus decline. The 1998 was an 8% decline. 2019 was a 1% kind of a move. So, of course, there's the 9%, 9.5% move in 95 as well. But broadly, more times than not, markets quieten down a little bit, even correct a little bit, going into the first rate cut. What happens 6 months out after the first rate cut? I think the evidence is pretty much clear. The bias is on the upside. The degree varies. The big one, of course, is the 25% move that we saw in 1998. So interesting. Now, I'll just look at with recession scenarios, right? Rate cuts with recession. And I'm just using two fairly recent examples. 2007, where the Fed cut by 500 basis points. This is the global financial crisis with Lehman, etc. And 2001, where the Fed cut by 550 basis points. Here, the picture actually completely changes. So I don't want to kind of present the picture of what happens into and out because, these are recessionary periods and you can see what happens to markets. In these two instances in 2001, 2007, S&P peaked to low. The fall almost 40 and 60% respectively. And earnings per share for the index fell 23 and 45% as well. I'd like to say once again that the base case is that we will actually not see a recession. At least market is not pricing it in at all. It's not in the market's forecast that there will be a recession. They're very focused on the fact that it'll be, absolutely perfect kind of soft landing along with rate cuts. It's never happened. Many have pointed out it's never happened in history. You do get a little bit of a bumpy road and the degree varies, but you do get that. Will this time be different? I think that is the question we need to answer. We'll know only and be wiser in hindsight. Andrew is with us. Andrew,